Today is Tuesday, July the 2nd, and the McClellan oscillator that I thought would be a little bit higher when we opened this morning actually ended up being exactly where it was on Friday. Even though we had good advances to decliners for some reason, that's the way it was. Today, advances and decliners were pretty much dead on even. So that means our McClellan oscillator is going to make the same imprint now for 3 days in a row. We saw the market drop at the open and then just zigzag with a lot of buying in the last 15 minutes into the close. So could be setting up for something positive again tomorrow. The market is still optimistic of two things. One, a China deal, or at least the realization that we can probably live with tariffs the way they are. However, I tweeted out this morning that a lot of companies have done advance notice that their earnings are going to be less than what they thought they were. So earnings start next week, end of next week with the banks typically. So let's wait and see in the next few days when the market starts worrying about earnings reports, because I don't think negative earnings by any means are built into this market because of the new highs that we've seen. So let's look at the charts. The S&P, has been on this tear since June the 3rd. We came down and we tested the top of the gap again today. This gap has to be filled. My guess is that it's going to be filled before or during earnings. What happens between now and then, don't know. But I'm thinking this gap is going to be filled before we move above the earlier record high of 29.78. But today we finished for a record close of 29.73.51. Apple finished the day, let's go on to the daily here. Apple finished the day up $1.23. Let's see what kind of volume we're experiencing with Apple here. Very low trading volume, so no commitment here after 3 days of selling, with this day being higher than the 20-day moving average. There was no commitment today to drive the price up $1.77. Low volume. Caterpillar. Let's see what happened with Caterpillar volume. Again, another low volume day. We didn't look at that. The Dow volume was what we've come to expect. NASDAQ a little bit less than average. The S&P 500 a little bit less than average. But we've seen Caterpillar substantially less than the last 22 moving 20 average, and Apple being the same. We don't see anything particularly good about Caterpillar, and there should be, but again, as I said, the Chinese have not committed to buying anything in this deal. I think they're going to stretch this out probably a bit longer, quite a lot longer is my guess. But they're going to wait until there's some more capitulation on the side of the Americans. But we saw the stock come down to this level, so the Chiku span for Caterpillar actually broke through the cloud but ended up above the cloud. We didn't go down and test the 200. That is still possible. We had support on the 8 EMA with 2 days of red volume and very low buying or selling. It's really a coin toss for tomorrow. My guess is that Caterpillar is going to be one of those companies not reporting very good earnings, and the flat cloud is going to have to act as support. We've got the 50 simple moving average is making a nosedive. The EMA, the exponential moving average, which relies more on this most recent portion of the 50 days, is still moving up. The 200s are flat. Gold had a big pop towards the end of the day. I was looking at it up until about noon or 1 o'clock because I was out with my daughter in Raleigh today, setting her up in her new house. But look at that pop in gold. So I'm going to have to do some research and find out why that is. I was really hoping and thinking that this gap would be filled. It will be at some point, but that clearly wasn't today. So that was an opportunity missed to buy back into gold. But after a big day like this, I wouldn't be surprised to see a bit of a pullback tomorrow. But if it's anything to do with any bad news on the dollar, then it's going to be going a bit higher. WDC, perfect doji day after being rejected from the 200. Volume was just a little bit under the 20-day moving average, so that's encouraging. We've had these three big green days last week, and then a fairly big red day yesterday. But green has been outnumbering red since the 21st of June. That was a Friday. So all of last week and this week, green is outnumbering red. Whirlpool. Let's go to the 1 day. Let's just make sure that WDC was a 1 day. Yes, it was. Whirlpool. 1 day finished with this hammer up here. This looks like a nail, so this is called a hammer. We could see a reversal on a hammer, and we might see a reversal that comes down to test the 8 or comes down to retest this trend line again, because that's what happens with trend lines that have multiple points on them. And this trend line has a point back up here, then this one, this one, this one, all of these. So we've had a breakout, but it's not unusual now for it to come back and test and see if there are still buyers on this trend line. And the cloud certainly shows bullishness ahead. We've had the 50 cross the 200, so that's a good sign. We've got the 50 simple moving up, we've got the 50 exponential moving up, we've got the 200 simple starting to curve up. So might be time to get back into Whirlpool. It would be wonderful to buy some off of a test of the 8 EMA tomorrow. So let's keep an eye on that. But if I buy some, it's going to be by selling, by buying the stock and selling the first out of the money call against it. That was working for me on the way up. So I'll be more involved in the market tomorrow, and thank you for listening.